Welcome everybody to Crypto Money Magnetism Collective. We are here to create a safe space for people to learn and share information in the world of cryptocurrency. We especially put an emphasis on positive mindset so that we are doing things in an empowered way. And our guest speaker tonight, Carlos Quintana, is a fan of both of those areas. And so he's the perfect guest speaker. He's got some amazing, interesting topics for us tonight. I will go ahead and hand it over to you, Carlos. Thanks for being here tonight.
Yeah, thank you for inviting me again. This is a very exciting topic for me. Obviously, we've all been exposed to the terms of crypto, buying Bitcoin, Ethereum, and so forth. And that's our typical type of investing. Now, for this topic that we're going to talk about today, which is going to be staking, it requires a certain mindset. The mindset is not of a trader, but is going to be of a long-term investor. And the typical sense of staking is usually understood by us putting something in a smart contract or in a platform that gives us some sort of interest. What's missing, or what was missing for me at the beginning of my crypto endeavor, was that as I was putting crypto into these staking platforms and it would create a small percentage of it, of more crypto, I didn't really have a strategy behind it. I was just saying, like, I think I'm going to hold this coin for a couple months. So therefore, I'm just going to go ahead and put it here in my Yoroi wallet and stake ADA so I can earn some like 5% interest. I'm going to go ahead and put my DOT to earn some sort of interest. And then I'm going to go ahead and when it pumps, I'm going to go ahead and sell it. That sort of strategy is fine. Like, who cares? Like, we all do that in our trading type of setting. However, a staking strategy is a little bit deeper than that. And what got me into the staking strategy was a project called Hex. I won't talk too much about Hex. I'll talk about the theory behind the staking ladders and so forth, like as far as the strategy. And then we'll go into the technical parts of the projects that I'm involved in. But if you guys find a project that has similar sort of features that allow you to do a staking strategy, the meat of the topic of tonight is the strategy in itself, but not the involvement in a certain project. So you guys choose, you guys make your own choices as far as what projects you guys want to go into. But obviously the ones that I'm going to be talking about are projects that have definitely worked out for me and have given me multiple gains, like 50x, 100x, and certain things. So, all right, without further ado, let's go ahead and get started with what the strategy is. A strategy is going to go ahead and kind of have us put into the mindset of very long-term sort of investors. And the strategies are going to be in short-term and long-term thinking. I was sharing with you guys on the intro how short-term and long-term strategies are necessary when it comes to staking. The short-term sort of staking strategies are going to be something that you can actually cash out either every week or maybe once a month for you to replace or for you to have some sort of monthly cash flow so you can go ahead and elevate the current lifestyle that you have. So the strategy behind a short-term staking strategy will be to give you more passive income so you can afford better things in life. You guys want to go ahead and do more trips during the year. You guys want to go ahead and have a more expensive vehicle. You guys want to go ahead and have another house, a rental property, whatever it is that you guys want for you guys to afford more during the month. That's going to be our short-term staking type of strategy. Long-term type of strategy will be that we lock up a certain amount of money, $1,000, 500, 10,000, 100,000, $1 million, whatever the amount is, whatever your financial profile is. And we're going to go ahead and stake it for long-term, 1 year, 2 years, 10 years, 15 years. And we're going to go ahead and create those sort of strategies as milestones for us to then be able to say, you know what, in 5 years, I'm making myself the goal that I would like to purchase a house. And what would it take for me to actually have $500,000 to be able to purchase a property? a rental property or a house for myself? Or what would it take for me to gift my mama a car? What would it take for me to do something like that? And how long does it have to be staked for me to produce that sort of interest? So I'll go ahead and dive into what a strategy is as far as the long term, and then I'll go into the product of short term. A staking ladder, like I already explained, is going to be us dividing a certain amount of money. Let's say that we have $10,000 right now. We have absolutely no use for that $10,000 right now, but the only use that we have is to make it grow. We can actually divide that $10,000 into 10 different stakes. And one of them, like the 1,000, is going to go ahead and expire within 365 days. The second $2,000 is going to go ahead and expire in 2 years. The second $1,000 is going to expire in 3 years, and so forth, all the way until the 10th year. I have a little bit of a projection with the Hex project. I'm going to share my screen real quick. There's a website that is a pretty cool tool. It's called Stake Hex Today. Now, Stake Hex Today is basically when you purchase Hex, you are going to be able to calculate the amount of interest that it produces. Now, to understand a little bit about how Hex works, actually, before I continue sharing my screen, I'll share with you guys a little bit more. When you purchase Hex and you stake it, there's something that you get called a T-share. A T-share pays out 6 Hex per day. So therefore, if you have a certain amount of Hex and then you put it into the system in hex.com for you to stake it, it's going to give you a T-share, and that T-share is going to pay out a certain amount of Hex. The greater the amount of Hex that you have, the greater the amount of T-shares that you're going to get in return. So therefore, the interest will vary depending on the amount and depending on the term that you're going to go ahead and have it. Now, I'll share my screen now so you guys can see what I'm talking about. Let's just say that we start with $10,000. And we can go lower, we can go higher, whatever it is that you guys want. This is a tool that you guys can use depending on your own financial profile. If you guys have only $1,000 to invest, try it out. See what actually is going to go ahead and do for you. Let's say that you put in $1,000 to a 15-year term, how much interest you're going to go ahead and have. Now, let's go ahead and have here, let's go ahead and start with that actually, $1,000 for only one stake for a term of 15 years, okay? So that's 5,555 days. If you guys want to do a stake in 1 day, you guys can go ahead and do that. The maximum amount that you can do is 15 years. So $1,000 is that for one stake at 5,055. Okay, so then we're going to go ahead and click view. And what it does here, it basically tells us that this little bar right here is going to be the curvature of a Fibonacci projection of the curvature of the price. And as you can see, you know, it's at 18 cents right now. It has actually gone up to like 50 cents. It's doing a little bit of a correction at the moment, but at the same time, it doesn't really matter. It's been a 10,000x so far. So it's just going to go ahead and continue to go up. But even if it didn't, what about if the price did not change at all? Let's go ahead and actually do a very conservative type of projection where the price actually stays around the same time, around the same price, which is not very realistic because we know that the price continues to progress up. But what we can see here is a very unrealistic type of projection. But what we really want to get to right now is how much interest you're going to be able to produce. So as you guys can see, your estimated cost of this one stake it's basically $1,000. So your principal is basically $1,000. But as far as the interest that it has produced $13,930. So that's basically the payout per day that you're going to go ahead and get. And your ROI is about 15x. So it's really not that much. And this is basically just on the current curvature, staying at the same price, like I said, which is completely unrealistic. However, now if we actually follow a little bit of a curvature, like that is not so crazy, but like we go ahead and kind of, have a little bit of a projection right here as far as what's actually realistic. You guys can see that you guys are going to go ahead and have a 2,140x in here, which to some people that might sound very crazy, but it's not. If you were here at the beginning of Hex, it has done a 10,000x, so it's not unrealistic at all. But anyway, this is basically what it would actually give you. Your principal in the $1,000 would actually be $154,000 in 15 years. And the amount of interest that you actually created here is $1.9 million. So the total amount of projected here is $2,139,000. Sounds crazy, like I said, to a lot of people, but it's really not. Even if you wanted to do like $10, you still have 770,000. So what does this tell us? It tells us that the amount of interest that it's producing, the amount of hex that it's being minted, as far as according to the t-shirts that you have, every t-shirt will produce new hex. There's an inflation rate on hex, and all the new tokens that are being produced gets paid out to the stakers because it's a proof of stake project. So therefore, you guys are going to go ahead and the stakers are going to take advantage of all of this. Now, this is obviously one stake for a 15-year period that we're talking about, which is completely fine. I put in here a certain amount, a big amount of money, and obviously according to a certain projection is going to go ahead and kind of give me a big retirement type of account, for myself. But another strategy that we can go ahead and use here is go ahead and actually set up annual stakes that expire every single year for us to actually have some sort of replacement of salary, right? So let's go ahead and play with $10,000. And we want to go ahead and do a 1,000, 1,000, 1,000, 1,000, 1,000 every single year for 10 years. So 10 years, that's 3,650 days with the current price projection that we have here, which is very conservative. And this is what we're going to go ahead and get. We're going to go ahead and get that your 1,000 stake expiring in 2022. The principal will be $3,648 with an interest paid out of $479. So in 1 year, your one stake, your $1,000 is actually going to be $4,127. It doesn't really sound very exciting, but for some people that are playing it conservative, for some people that are kind of just want to get the interest from a certain money, this is pretty good. It's like thinking about it as a CD. You lock up your money, you get a certain amount of interest. And obviously, for me, in my current strategy, I have put a lot more money staked expiring in year one, so I could actually have a good chunk of money coming in year one. So I just play with the numbers. I play with the staking type of like the amount that I'm putting in each one of the stakes, so I could actually have my desired outcome. And I usually kind of play it as a very conservative amount here, so I could actually have, let's just call it a not more realistic, because it's not more realistic, but a little more grounding type of things. Because when you put the amount here to like $80, then your result is like $80 million, and it's so hard for someone to comprehend that that's actually possible. So I just play it into a conservative manner. Like I said, it's really not unrealistic. I've done 100x on this project, and it's really not unrealistic at all. But anyway, if we play it this conservative, this one stake is going to give us this. The second stake expiring in 2023 is going to go ahead and give us 11,000. 2024, 26,000. 2025 is going to go ahead and give us 50,000. 2026, 64,000. 2027, 83,000. 100,000, 139,000, 172,000, 208,000. So as you guys can see, you guys can actually create this strategy however you guys want. The purpose of this session that we're having right now is about having a strategy long term. So whatever it is that you guys want to make it mean, you guys can go ahead and do that. In a certain stake, for example, that I have expiring in 15 years, I could make it mean my strategy is to actually, I have a Roth IRA, I have all these typical traditional financial vehicles that will give me a certain amount when I retire at 59 and a half. So I'm 31 years old, but and I'm already thinking like in about 15 years, I would like to have some sort of retirement sort of money kind of coming in already, right? So in this case, I can think about my 15-year stakes as some sort of retirement vehicle. That's my strategy for the 15-year one, right? So I'm gonna go ahead and stake my money. I'm gonna go ahead and it's gonna expire in 15 years, and that's gonna be my money that I would like to take for retirement. And think about it this way: this is going to be incentivizing your delayed gratification. In crypto, the more that you delay your gratification,
if I give you a choose and answer another.
Let me just okay. The more that you delay your gratification, the more ROI that you're gonna go ahead and get. So imagine having invested in Ethereum, 7 years ago, or imagine having invested in Bitcoin 10 years ago. Delayed gratification is a key for like in crypto projects. When you buy in a certain project and you wait for more than 4 years, there hasn't been a person that has lost money if you all have held your money for more than 4 years. So this is basically what we're creating. We're creating these like small different amounts for us to delay our gratification and being able to produce the amount of interest, which in the average for the Hex project is about 40%. So in the other type of strategy that I just showed you guys, the way I'm thinking about it is that the yearly ones are going to go ahead and replace my salary. So I play with the numbers. I put in $10,000 expiring in year one. So it could give me a certain projection of $60,000 that is going to go ahead and give me due to the interest that it's producing. In year two, I'm putting in only $5,000 because that's already giving me $120,000. And then in year number three, I'm only putting like $3,000 because I know it's going to go ahead and give me about $150,000. And as I play with the numbers, then I can actually use that strategy for the staking ladder to replace my annual salary. And what that opens up for me is for me to actually be able to do anything I want during the year. So I'm an accountant here, I'm a tax strategist, and I've been able to reduce the amount of hours here at the accounting firm because I still don't want to let go of this job. I don't want to discontinue working here. So even though I could have enough income for the full amount of the year, it gives me the freedom to do whatever it is that I want. More travel, spending more time with my family, and so forth and so forth. The other strategy that you could create is like in a 5-year milestone to say like within 5 years, I'm locking up $100,000. And in 5 years, the amount of interest that I'm going to have is going to be $1 million. So I could be able to afford a certain house that I would like to have in 5 years. So it's up to you to create your milestone. It's up to you to create your strategy, but this is a nice way to see the general picture of the long-term strategy with certain milestones to be able to fit the lifestyle that you want. But I think, Claudia, you had a question.
Yeah, I just have a question about, okay, because you said play with the numbers, but so why not lock up all the money that you have available right now for that 1 year, and then when that 1 year expires, you use all that chunk and lock it back up, whatever, instead of like making these portions all over the 15 years? Because on top of it, isn't that very risky for something like a project called Hex to think in 15 years it will still be around, or in 15 years it, like it's a very long-term thinking for something that is so new? Or don't you think that way?
Absolutely.
Yeah.
Absolutely, I do. I think it's a valid concern. And like, first of all, the disclosure in there is that, I've done months of research about this project. I've actually gone through the audits of the code. I've actually gone through the liquidity of the code, the slippage of the code. I've done a lot of due diligence before I actually started investing in this project, and I think that everyone should. And at the same time, Hex is a finished product. It is a finished algorithm without admin keys. So the reason I really like this project is because it can the algorithm continues to mint at the inflationary rate as far as according to the t-shirts that it has. So it will continue to operate. No one is behind it trying to modify the code. It's actually impossible for someone to modify the code. It's already done, and therefore it just continue to work. There's no one in the background. So the price action that it has is due to the fact that there is supply and demand. There's a certain amount of circulating supply, and there's a certain amount of demand into the project. It has nothing to do with the operation of the project in itself. Price action has nothing to do with the operation of the project. So just to make a point on that, let's go ahead and talk about IBM. IBM is a technology company in the typical traditional financial world, and they have their own operation. They make billions of dollars in their operation. And then there's a stock market. Then I could tell you, Claudia, I have an IBM stock. I'm going to hold it for 1 year. And then when I'm ready to sell it, then you say, you Claudia, you would be telling me like, hey, Carlos, I would like to purchase your IBM stock. How much would you be selling it to me for? And then I would say, I would like to sell it to you for $10. You're like, okay, cool. I'll buy it from you for $10. And then Scott goes in and says, you know what? That company is going to be and have a bright future. I think that stock that you're holding is incredibly valuable. So I'm willing to pay you $25 for your stock. And then Scott goes to the bar and he says, guys, I have a stock right here. I would like to sell it for $50. And someone says, no. I'd like to buy it from you at $10. And then he goes to everybody and he sees that there's no demand for this stock because there's an article that just came out saying that IBM committed fraud. And he's like, oh, crap, I'm going to have to sell it for $10. Price action has nothing to do with the operation of IBM. IBM will never see the money of what's happening here in the stock market. Literally, the stock market is supply and demand. As far as I hold a certain amount of stocks that have, I'm basically giving it a value and you're buying it from me. And there's this market of, buying and selling stocks, but it has nothing to do with the liquidity. It has nothing to do with the operation in itself. The only time that stockholders are going to go ahead and see some sort of projection or income from the actual production of their services, their operation, is when the stock gives out a dividend. Obviously the dividend is coming from the revenue from the stock market. So that's basically my little take on price action. The project of Hex is already a finished product that is basically its only job is to produce more Hex and give it to the stakers. That's its only job. The price action that is happening on the trading platform on Uniswap has nothing to do with the project in itself. It's only supply and demand according to what you think is valuable and what I think is valuable.
So when you did your projections, that wasn't the price action that you were playing around with there?
Yeah, so that's why I said, as far as let's just go ahead and have a conservative manner. Let's go ahead and maintain a linear form as far as the same price that has nothing to do with the price. Let's just go ahead and see how much interest it would actually produce at the current amount, at the current price at 15 years. Let's just go ahead and imagine that the price is never going to move. How much interest do I still produce for the investment that I have? And the answer to that is about 40%. Obviously, what we're considering, and since you get paid in Hex, the price volatility will be in the, as a factor into your calculation for the valuation of the interest in itself, because you're getting paid in hex. So according to the multiples of the curvature of what the price action is, that's why it's realistic to have that curvature of price going up. Because what it's tending to do is that when there's a project with a lot of money staked, there's not a lot of people willing to sell. So therefore, since you're not willing to sell at $10, Claudia, the IBM stock, Scott is going to have to find someone that is willing to sell it to him for $20. But whenever he finds like suddenly someone trying to sell it for $20, there's not a lot of people that are selling at $20, because then Scott is already staking his stuff for like 10 years. So therefore, the next person is not going to be able to buy it at $20 too much, because then, there's not a lot of selling pressure. There's more buying pressure than there is selling pressure. Now, obviously, every single project, every single stock in the stock market is going to have its little pump and then its little correction, because that's the psychological effects of capitalism. When someone is very profitable, it incentivizes people holding that stock to sell it, so people could actually be able to buy it at a cheaper price, and there could be some sort of penetration in the market. So that's just what it is. You can play with the number as far as a curvature, but what I would actually invite you to do is to kind of maintain the line at the same price, so you can actually only calculate the amount of interest that you would receive. But it would be unrealistic to not put the curvature of price increasing, because nothing stays the same price, nothing. Even the S&P 500 has increased in price always since the beginning. And even in 1929, when we had the Great Depression, it dumped 80%, but then we still are, about like 100x from 1929, so it doesn't, it always has its little corrections, but it's always going up. Okay. Any other questions?
Hi, Carlos. Can you hear me?
I can.
I got a few questions. Couldn't the staking and ladder strategies that you're talking about apply to any type of stock or crypto investment? You're
Yes.
talking about two things, right? A strategy, but you're also talking about a hex, which is my next question. So you're saying, yes, this strategies can be applied to any type of investment vehicle you use, right?
Yeah, absolutely. The reason I like Hex, and I have other investments, obviously, for the short term. I have Olympus DAO, and I'm a big Polkadot, guy, and I'm like staking. I'm doing a lot of different things, but specifically the reason I love Hex a lot is because the flexibility that it has for you to actually be able to lock it up in a smart contract, and you select the days. So the way I think about it is like a CD, like in the traditional banking system, that I actually will be able to say 365 days, and that's as long as I'm going to go ahead and lock it up. In the typical platforms, you have to be very disciplined, because if you have Voyager, for example, giving you 12% on a certain coin, it's very easy for you just to sell it. It's very easy for you to just like unstake it, and there's really no consequences at all.
So let me ask you this: what is Hex exactly? Is this a cryptocurrency? Is this a stock? Is this a savings account of sorts? Is this some kind of account where one is putting money into, just like you're saying, as a CD? What exactly is Hex?
Hex is a crypto asset. And it's basically, you can look it up here, like in your coin market cap or CoinGecko. And it's basically a crypto asset that you would be able to purchase in the traditional DeFi. Here, there you go. It's at 18 cents right now, and you could actually purchase it here on Uniswap.
When you say it's a crypto asset, what kind of asset is it? Like what? I don't understand. It's like
Bitcoin. So
but you're saying it's not a currency.
Well, currency is something that you use to exchange for something of value, like a dollar. you know, and I give it to you because it's backed up by what well, it's a fiat, so there's really nothing backing it up, but the US saying that it's
But you
valid,
could
but
you could do that with, say, a Bitcoin also. You can transact with Bitcoin theoretically. You can transact with Ethereum, but how can you transact with Hex? Is it a
that's why it's not a
currency?
currency, because it's not something that you can transact with.
Okay, so it's not a currency. That's the one thing I wanted to understand. So Hex is not a cryptocurrency, and
Yeah.
it's not a type of stock. It's an asset. It's a crypto asset. But what exactly? It's not an NFT. It's not. What is it? I don't understand what category this Hex falls under.
Yeah, an asset. It's like Bitcoin. Think about Bitcoin. Bitcoin is an algorithm that miners go ahead and mint new Bitcoin from thin air by solving a mathematical problem. Hex is also a crypto asset minted from thin air by having an algorithm that is based on proof of staking. So therefore, there's a limited amount of supply that is circulating at the moment, and there's an inflationary code put into it, and it mints 3.67% annually more as far as these coins go. So if you think about it, it's like in the US government, they can go ahead and press a button and produce more dollars. So it's the same thing. It's this imaginary money that we have in the government, but us is in the digital world, where our digital type of money in the crypto world is a lot better than fiat because it actually appreciates in value.
So you're saying that this is being mined, and it's being mined automatically. There isn't anybody that's actually benefiting or earning from the mining of this type of asset?
That's correct. In theory, there are some validators for the, it's like you have to think about it that Bitcoin is proof of stake, and therefore there's physical miners minting new Bitcoin. As we can hear in the news, Ethereum is going to Ethereum 2.0 and is going into proof of stake. So proof of stake is going to be more like,
but that's for smart contracts. The
that
proof
is
of
correct.
stake, yeah.
Well, it's not specifically for smart contracts, but it's just a different type of staking. I mean, a different type of security on the network. So miners in Bitcoin are to secure the network, the whole blockchain. In proof of stake, it allows for minting of these new coins, but without the miners. So it's just a little bit more of an advanced type of strategy to have a blockchain. Now in Hex, the algorithm is the one producing the new coins of Hex. So
what's a Hex worth today?
18 cents.
18 cents. And what is the evidence that supports this kind of growth that you're projecting with those charts that you were showing? Because they sound too good to be true. Like what are the fundamentals? Like, how can I be sure that this is that what you're telling me is valid, or how can I believe in this? How can you prove to me that this growth that you're projecting is actually going to happen?
It's historical. Like, for example, how can I prove to you that Bitcoin has had a 6 million ROI? And by historic, it's like I can show you the chart, of when Bitcoin was minted and created up to this point, and it's a 6 million% growth. How can I prove that? I mean, that's too good to be true, but it's true.
Well, from what I understand, Bitcoin is basically the new gold standard, and it's already reached mass adoption to the point that that there's a lot of faith now in it because there's so many people into it and so much money that's been put into it.
Absolutely.
And
Bitcoin is a daddy.
Yeah, but I also hear that because of that, because Bitcoin essentially won the race in the crypto world, that all these other cryptocurrencies are going to kind of fall away to the wayside. And I think the only exception to that would be something like Ethereum, which has other purposes such as smart contracts and other applications. But it seems, from what I understand, it seems like all these other cryptocurrencies are sort of
fade away.
They're gonna
you
send
have
the
a
word.
valid point. Think about it. I don't know how old you are, but if you were in the dot-com boom, uh, only a few companies survived. So in the crypto world, we have major speakers and major, very intelligent people talking about the Bitcoin standard and how Bitcoin is going to be the standard as far as, backing up the economy of the world. And the way that you can think about all the other projects are going to be more like venture capital. You're investing in a project like Bitcoin has no project behind it. Bitcoin is just an asset, like gold is just digital gold. Ethereum has an operation behind it. There's smart contracts, there's gaming, there's NFTs, there's et cetera, et cetera. Polkadot is a project that it holds all these other blockchains so they can interconnect and talk to each other. Cardano is doing major advancements on the blockchain. So we can see that an asset such as Bitcoin is layer 1. There's layer 2 type of blockchains, and now they're working on layer 3 type of blockchains, and Polkadot is a layer 0. So all of these different things are going to evolve as we go through as far as our technology. And a lot of these projects are going to go ahead and die. So, Shiba Inu is not going to survive in 30 years. Who knows about Doge? Who knows about all these meme coins and whatever not, and all these different projects that are promising a certain technology that we don't even know if it's going to work out or not.
Well, how do we know that Hex is going to work?
Because it's already completed.
What does that mean?
It means that the algorithm, there's no admin keys. There's no one that could change Hex. There's no one, and there's audit reports about this already. But Hex is a completed project, and there's no people behind it. It's this algorithm living in the blockchain of Ethereum at the moment, and is just producing new Hex every single day, and he's getting paid to the stakers that support the security of the network. So
there's no limit, just like there's 21 million Bitcoin that can only be minted. There's no limit in Hex. Is that what you're saying?
Absolutely. But there's no limiting Hex. It's always
creating... But isn't part of what produces value scarcity?
In theory, but Bitcoin, although maybe you have a different understanding of what Bitcoin is right now. Bitcoin is inflationary. Bitcoin is actually minting new Bitcoin.
It is, but right now I think 18 million are in circulation, but there's only 21 million that will ever be.
But it's still producing though. At a certain point in 100 years, then the production of Bitcoin is going to stop. But at the current moment, Bitcoin has an inflation algorithm into it, and it produces new Bitcoin. And Hex has no time for it to stop minting new Hex, and therefore the scarcity factor doesn't play out as big, for example, as in Bitcoin. But we're not trying to compare Hex with Bitcoin. We're just trying to have a certain growth and curvature of the price growth in a 15-year vision, so we can actually have a certain amount of interest being produced. So whenever we create our strategy, we have enough interest that comes out for a certain milestone that we have. We're not saying that Hex is going to have the same growth as Bitcoin did at 6 million%. But as far as what history has told us, from the moment that Hex was actually created, it actually has had a 10,000x as far as the valuation of price. So as far as me telling you anything, all I can show you is directed to the chart, so you can actually see the appreciation of Hex. Do your due diligence and do your technical analysis and your fundamental analysis, so you can actually see whether Hex is a good project or not. I'm not here to sell Hex. I'm not here to tell you should actually buy Hex. I'm here for the meat of the thing, which is create a staking strategy for you to actually think more long-term. Stop using your budgeter app so you can actually...
Got you. So I was under the impression you were selling Hex here. You're selling a strategy. You're selling this ladder strategy that you're talking about. Okay.
Yeah. I'm just sharing what actually has worked out for me and has made me tons of money. So in the short term, I'm going to share with you another project that works out for me. I'm not telling you to go invest in it. I'm just saying that works for me. but I have another project that's called Olympus Zao and pays me like $2,000 a week. So as far as my strategy is as far as the staking on different projects that are working out for me, that I've actually done my due diligence in it. I know a lot of it, and actually I have. But let me tell you, I have a team that helps me with all of this.
When was Hex founded? When did that start? Is this new?
No, it started about 2 years ago.
2 years ago? And then what's the market cap right now? Like, what's it worth? How much money's in there right now?
Well, there's two. You're asking two different things. The market cap is one thing. The market cap, I believe, is $100-something billion.
Wow. Okay.
And it's actually number 8. If you go to nomics.com, let me share my screen there. And now, by the way, you're asking really good questions. But now I was hoping that we would actually go into this after I talked about, about the strategies, because this is a little more technical. So I'm hoping that we're not losing a lot of people because of this. And I personally think this is very valuable. And these are the type of questions that you should be asking, definitely. And you're asking very, very good questions. So I don't want to discourage that.
Okay.
But here is number 12 on Nomics. And it's at 18 cents. The market cap is at $25.67 billion.
Yeah. Wow.
And as you can see here, as far as the max, all right, as far as the max, it started here at 0.00 whatever, 0.004, and it has gone all the way to about like 50 cents, and then right now it's at 18 cents.
Yeah.
But here, for example, here I just shared something on Twitter for you guys.
Carlos, and you have made money even though when the price fell down from 50 to.
Yeah, because of the amount of interest that I'm producing. It doesn't really matter. I mean, there's some times that obviously the amount of the dip is obviously more than the amount of interest that I have. But I've made multiples. I'm still in the green. Like I've had like 100x already on, from the moment that I invested. So I really don't care about the dips. As you can see here, historically, from the moment that it started, we see these dips at 92%, for example, and then we see a growth and a pump of 794%. Then we see a dip of 70%. Then we see a pump of 3,000%. Then we see a dip of 68%. We see an increase. Like I said, these are normal here with Hex. This is basically what it does. People become very profitable in their stakes. The stakes expire and they want to sell. And there's usually a historic price action here of 62% dips. And then suddenly everything pumps again because there's not a lot of selling pressure. And then basically dips again another 50%. So right now, when we saw everything, we saw a pump of 343%. And then suddenly right now that we were incredibly profitable, I cashed out a lot of money too. So I'm part of this, as far as to blame for this dip right here, because I went ahead and sold a lot of it because I wanted to diversify a little bit of my investments. And I'm interested in buying property in Phoenix. So I'm really trying to do a lot of savings right now so I could actually be able to do that. So, and then as we can see, we have this 61% drop. So what we can see here is that, again, is going to do the same thing that it has been doing over and over and over again. We're going to go ahead and see a pump because there's not a lot of selling pressure. This is basically a buying opportunity. So what do you do with the buying opportunity? You buy a lot, you stake it, and then therefore there's less selling pressure over a pump. And then it's going to make you a certain amount of money. And then people that are already profitable are going to sell. And this is going to go back into this is going to pump to like $1. And then it's going to go back to 50 cents. And then it's going to pump to 150. And then it's going to go down to $1. And we're going to see this type of price action over and over and over again. Okay. That's basically what I wanted to share on that.
We have a question. When is a good time to get into Hex? From Violet.
It's always a good time to get into Hex because we're not thinking short term, guys. We're not thinking short term. We're thinking very long term. We're thinking about 1 year, 2 years, 15 years. Who cares about when Bitcoin went to $100 and then it dipped all the way to 10. Who cares? It's now $60,000. It doesn't really matter. But the price action, like I said, I want to make a point. Price action is not what we're looking for. What we're looking for is the amount of interest that is producing for you. So that's why we want to maintain it at a very conservative level, so we could actually have a very clear picture and conservative picture to see how much interest it would actually produce. I'm going to go back to this projection right here for you guys to, like I said, I really invite you guys to play with stakehex.com here. Let's go ahead and actually, for the people that have more than $10,000, let's go ahead and play with, let's just say $50,000 over 5 different stakes for 5 years. 3,600, no, what would be 5 years times 365? That's 1,125 days. Let's go ahead and play with it at a very conservative manner, where let's say the price of Hex is going to go to $2.53, which, like I said, is very unrealistic according to the historical price action that it has. But let's go ahead and play with that conservative manner. If you go ahead and just by the amount of interest that you guys are looking at this is basically what I want you guys to look at, the amount of interest that you guys would be able to gain from all of this, and the delayed gratification principle that I would like to ingrain basically on you guys. If you guys had Bitcoin, you guys don't care about the price action. Imagine getting 40% interest on your Bitcoin and then cashing it out in 1 year or 5 years. That's the point of this conversation. So if we had $10,000 with a very conservative price action, you guys would still be able, as far as your 1 year stake at $10,000, would be able to cash out 44,000. Your 10,000 stake here, 93,000, 167,000, 273,000, and 352,000. This is very realistic. Like I said, I've done 100x, and this is incredibly conservative. 35x is very, very conservative. But anyway, the amount of income that you would have from a $50,000 investment, as far as putting it in stakes, would be 931,000 because of all the interest that it produces. It would be different too if you guys were only gonna go ahead and lock up that $50,000 for the whole 5 years. It would be a lot more, because this is a compounding effect of the t-shirts every single day. Instead of expiring 1 year, 2 years, obviously everything gets built up all the way to year 5, and you guys would actually be able to cash out $1.7 million. And let's go ahead and actually think, like, if the price actually goes and stays under, you guys would still be able to cash out a lot more money, $92,871, even if the price dipped, due to the fact that you have all this interest building up for you. So it's just a way for you guys to compare it with your traditional type of investments that you guys have. That's why I wanted to compare it with your typical IRA. You know, you can only put in $7,000 a year. You guys go ahead and have your investments. You put it in the S&P 500. You have a growth of 10%. How much is that going to go ahead and give you if you have dividends paying out every single year? If you guys put in $50,000, how much would it be in 15 years if you guys have this compounding effect at 10%? You know, it would actually be 130,000 or whatever. I just gave you guys a very good example of what it would actually do when it comes to actually dipping in price. You guys are still in profit when it comes to producing the interest, delaying gratification, and producing interest on your investment. And this is for very long term. Like I said, I'll go ahead and share again something a little more realistic, which is going to be like around here.
Carlos, I have a quick question.
Excuse me, Carlos.
Oh, sorry.
Oh no, I'm sorry. I was waiting for him to stop talking. I apologize.
No, go ahead.
Carlos, this is Cameron. So for people who are just now, like, can you kind of give charts for people who are just now starting and, you know, say have probably like 8,000 to begin with, like how that would be projected? Because I heard you talking about like higher amounts than what it was I would actually be able to put into this.
Well, I talked about amounts of $1,000 too. You know,
okay.
If you're thinking about $8,000 and that's all you want to go ahead and do, you have to make a decision. You have to first distinguish what is it that you want to do with that $8,000. The strategy that you would actually have is, do I want to go ahead and save it for my baby? in 15 years for him to actually be able to cash it out in 15 years, so I could have a nice college fund. Another one would be, do I want to use that for me to purchase a house in 5 years? Or do I want to use that to replace my annual salary? So you go ahead and create your own strategy to see whatever it is that you want to do. Let's just say that you put in your $8,000. We'll play with the scenario again. But after this one, I think I want to move on into Olympus DAO, just so we can go ahead and
Carlos, I just wanted to see if maybe, because it's almost 8:30 and we can keep going. If maybe, could we possibly invite you back next week so that we could really get the meat of the short term and that you don't have to like rush through it? Because what you shared with us is really fascinating and exciting. And maybe, you know, digest it for a week and then do the short term next week, or like a part 2. Would you be available to do that?
Yeah, sure. Yeah, let's go ahead and see how it plays out for the next like 5 minutes or so, and then we'll play by ear. But yeah, absolutely, I would be willing.
I didn't mean to interrupt at all. I mean,
no. You're making a good point. You're making a good point.
And then Bobby has his hand raised after that.
So Cameron, it's $8,000 right now, for example, here. And am I sharing my screen? Yeah, I'm sharing the screen. Okay, so let's go ahead and see here that, let's say that $8,000. You want to have it expiring in 15 years because you're not going to do anything with that $8,000 right now. It depends on your needs. It depends on your financial profile. It depends on a lot of different things. But let's just imagine right now that for 5 years, let's say 15 years, which is going to be 5,555 days. And this is only for one stake. You're going to go ahead and view the profile. And let's go ahead actually and keep it in a very conservative manner. We actually have hit all-time highs at 50 cents. So let's just go ahead and kind of make it around that, because we always go back. All right. So your $8,000 at a very, very, very conservative price projection of the amounts that we've actually kind of hit already, in 15 years, you would be able to cash out $480,000 due to the amount of interest that you would actually be able to do. Now, this looks very flashy, but when we consider it in Hex, it's a little bit different because your principal amount is 44,000 Hex. The amount of interest produced for those 15 years is 566,000 Hex. Whatever value of Hex has in the 15-year mark is basically going to be the value of the investment that you get, that you're going to go ahead and cash out. It looks flashy because it's in USD right now, and it obviously looks like the projection is here at 79 cents. Like I said, even 480,000 on an investment of $8,000 is a pretty good investment when you're thinking about it this way. And this project, the reason that it's so great is because the stakers are the ones that are getting the inflation of the coin in itself. But something more realistic is going to be around like this. Yeah, that's, you know, it looks pretty nice, you know, $13 million right there. And now this is completely irrational for some people, but I don't know, for people that are dealing with, I'm a tax strategist. The reason I heard about Hex is because one of my clients is a whale right here, and he started 2 years ago, and now we're dealing with moving him out of the country, and he's actually looking into Dubai at the moment. He was looking into Portugal. He's looking into Dubai right now because he is cashing out about 150 million. And that's how I know about it, because I've seen the numbers. I've seen like the results of these sort of investments, and I don't think that this is unrealistic at all, due to the fact that I have personally made a lot of money with it. So it's not completely realistic, but it throws people out of the water. Like, I don't want to believe in it because it's too good to be true due to the, here. But early investors, if you meet any early investors on Bitcoin, it's not unrealistic at all. Like,
Carlos, that website that you show us, is that the website where you actually stake it, or is it just a website where you play around with it?
No, it's a website that I play around with the projections, because it allows me to create the staking ladders. Like if I want one for 5 years, kind of expiring.
Okay. So if I want to actually do it, do I have to first go to Uniswap and buy the Hex, and then what?
That's right. I see here Liz also asked the question, where do I buy Hex? What I would like to think about is first, what are your strategies that you guys want to think, you know, like as far as what are some of your milestones that you guys want to have? Are you guys thinking about retirement? Are you guys thinking about buying a house, et cetera, et cetera, et cetera? And then do your due diligence on the project. I don't want you guys to take my word for it. I want you guys to do your due diligence on this project and be able to do all of this. But the way to actually buy it, you go to Uniswap. I personally go to matcha.xyz, which basically searches for all the decentralized exchanges that you can get the Hex with. I go to matcha.xyz. I connect my MetaMask, and then I just put Hex. I connect my MetaMask here. This is my work computer, so I don't have my MetaMask here. But then I just go ahead and buy it, you know, with Ethereum or USDC. And by connecting my MetaMask, once I have my Hex, then I'm gonna go ahead and be able to see it in my MetaMask. And once it's in my MetaMask, the way to stake it, you go to hex.com. And this is basically the algorithm that is working in the background. Hex.com gives you basically the DApp to do it. You click on stake, you go to the background. This is now the blockchain. This is now working on Ethereum. And by the way, this is a little side note, but it's like a big side note. Due to the gas fees that are happening here with Ethereum, as far as the staking, is gonna go ahead and have a big cost. You know, like when you purchase Hex, it's gonna cost you something. When you go ahead and put it into the stake, is gonna cost you something. When you unstake, is gonna cost you something. So there's a new platform called Pulse Chain that is launching, and I'm an early investor in it. But Pulse Chain is gonna hold Hex, and it's the same founder as Hex, and everything that you guys have on Hex currently in your MetaMask is gonna get duplicated in your MetaMask when you guys change the RPC in it, like as far as the different network. Everything is gonna get mirrored. So your Hex is actually gonna duplicate. So it's very hard for you to be unprofitable due to the fact that your Hex is gonna duplicate into the Pulse network as well. That's gonna be launching in a few months. But anyway, this is on go.hex.com/stake. This is where you're gonna go ahead and click here for your MetaMask. You're gonna go ahead and see that this website wants to connect to your MetaMask. And this is where you're gonna put in the Hex that you want to stake for the amount of days that you want to stake. This is gonna go ahead and tell you how many t-shirts you have, which is the one that pays you the daily Hex. You guys don't have to worry about too much about the technicality of it unless you really want to dig deep. Then you go ahead and click here on Hex, and then you're gonna see the price per t-shirt, the payouts per day, and so forth. This is your due diligence basically right here. But that's basically the way that you do it. You go to go.hex.com, you stake it there, and from the results that you had here, as far as like having different, let's just say 5 different Hex, 5 different stakes, basically you would grab the amount here of the Hex. Okay, so you have a principal amount of 8,000 Hex, 8,000 Hex, 8,000 Hex per stake. And you're gonna go ahead and then do 5 different stakes right here. Then you're gonna do 8,000 Hex, and then 365 days, and then 760 days, et cetera, et cetera, et cetera. And it basically is a way for you to completely lock up your money without being able to touch it. If you break the contract, the smart contract, and you decide to unstake before, it's gonna go ahead and penalize you just as a CD. You go to the bank, you say, I would like to put in my money in a CD for 365 days. If you go in at the mark of the 6th month, they're gonna be like, sorry, we can't give it to you. And if we do, we're only gonna go ahead and give you half. What happens if you don't unstake it, or if you don't go to the bank to retrieve your money from the CD, they're gonna roll it over into the next CD. You know, so, or they're gonna go ahead and penalize you with some sort of thing. Same sort of thing here. So that's it. That's the meat of it. You guys should do your due diligence. The message here today is that you guys should start thinking about earning interest on the crypto that you guys have. Obviously, we have one side, which is trading. You know, we have a few Bitcoin or portions of Bitcoin, Ethereum, or whatever it is that you guys have for your investing, and you're flipping from one coin to another one, that's great. But if you guys go ahead and create some sort of strategy, it opens up a different level of freedom for you. It's no longer, you're no longer at the effect of what the market is going to go ahead and do and, keep checking charts or anything like that. You are now having your money working for you and creating these sort of interests for you that allows you to, if you create, like I said, depending on your financial profile, you can create a beautiful opportunities for yourself. So that's basically the mid of it. Do you guys have any last questions? And then like Beth said, I'll talk about the short term maybe next week. But if you guys have any questions, go ahead and shoot.
Yeah, a couple things. One, you're saying that you're making interest. That word is kind of throwing me off a little bit. It's not really interest, or correct me if I'm wrong. It's not really interest that you're making. It's that the value of the shares is going up.
It's actually interest. Because
if you buy, let's go with Bitcoin, it's $62,000, right? If you buy it now, and let's say that by the end of the year it's 100,000, those $38,000 that it made is not interest. That's
correct.
Just the value of the new Bitcoin is 100,000.
Yeah, so let me explain. You buy one Bitcoin and you stake it. At the end of the year, you would have 1.5 Bitcoin. That's the interest. The point.
And where's that? Where's that interest coming from?
Inflation. So let me explain it to you in the traditional financial world. A bank, where does the yield come from when it pays out the people? Do you think it comes from the investment that it does? Or do you think it comes from printed money?
I think it comes from money. See, that money's making money, and they're making a return on that investment. And
banks are not allowed to invest your money. Banks actually see your money that you deposit in the bank as a liability. They actually don't want to touch that money, and they don't make it work for you. All those interests that we think that's where the yield comes from, it's not true. The yield.
So when I'm paying 4% on my mortgage that the bank gave me, they're making that 4%. They're making that interest, and they're not paying it out up front.
No, but they're not paying it out.
They're not paying it out. But if I then open up a savings account with that same bank, and they're paying me, a 0.5% on the money that I have in that savings account, obviously they're making money because they're making 4% on the money that they lent me.
Yeah, but I'm trying to debunk. I'm trying to debunk a misconception that you have. The yield does not come from the banking operation. Then this is actually a fact. The yield does not come from the banking operation of the bank. The yield comes from, and then just listen to what I have to say about this. The money that you put in the bank is a liability in the balance sheet of a bank because it has to be put into the reserves. What the bank does, they go to the Fed, and the Fed gives them a loan at 0% or 0.0 something percent. And it loans them the money at a ratio of 13-1. So whatever they have as reserves in the balance sheet for the money that we all put into the bank, they get 13 times more.
That's right.
They get 13 times more, and they play with that money. That's the money that they use for investments. That's the money that they use to pay the yield to all the different banks, all the different people that have savings accounts, which is 0.01%, by the way, and they're charging 24% for their operations. But what I'm trying to tell you is that the yield does not come from the operation of the bank. The yield comes from newly printed money from the Fed. Gotcha. So with Hex, the algorithm is creating all these different new coins, and the new coins are being paid to the people that stake it and have a smart contract. We are basically the banks in this. If we say it from a position from the government, we are the bank, and we have a reserve in our balance sheet as far as what we put into the smart contract. That's our liability. And because we have that, the algorithm Hex is producing 3.67%. That's the inflationary rate. And all those new coins are getting paid to all the people that hold the smart contract. It's basically newly printed money that we're getting And-
Yeah, Hex is essentially emulating what governments do with money.
Exactly. But now
Yeah.
we get to be the bank. Now
Exactly.
we get to actually get the new printed money, which is basically new coins of Hex. At whatever value it has, we just get the new coins. And that's where the interest comes from.
And one more question. You kept talking about a MetaMask. What is that? What's a MetaMask?
Okay. I'm going to go ahead and take you to YouTube. So I'm going to welcome you to like really do your research first. MetaMask is a digital wallet that can hold your cryptocurrencies in there. Ethereum.
It's a digital wallet. Got it. Okay.
Yeah, it's a digital wallet. And if you want to go ahead and play with it, it's basically taking you deep into the DeFi world, where now you're going to be moving around in the blockchain and you need a MetaMask to connect to all these different sites.
Why use a digital wallet when you can go to go to Robinhood and buy crypto there, or buy crypto assets there?
Well, you can't buy all the crypto assets there. You can only buy a list of them. And some of these projects, like for example, the reason that a lot of people are into crypto is because we don't want centralized banks holding our money. Robinhood, Coinbase, all of these people are centralized exchanges that hold our crypto. And what we really want, we want to have a hard wallet that we can connect and bring our Bitcoin here. Well, I don't have my hard wallet right here. I have it in a vault, but that little USB drive that I have there holds all my Bitcoin. So therefore, if I wanted to put it in my pocket and then take it to Singapore and cash it out there, I can do that. It's not held in a Coinbase account where they have my KYC.
So it's a mistake to buy cryptocurrency on Robinhood. It's better to have a digital wallet.
Well, Robinhood, specifically to Robinhood, yes, is a mistake. So you should buy probably in Coinbase and then put it into a hard wallet so you are able to secure your crypto assets. You should never just let it, unless you are a true beginner and you're always trading back and forward, then you might want to keep it in the Coinbase account because.
But Coinbase charges a transaction fee when you buy and when you sell of 3%. Robinhood is free, which is what prompted me to go to Robinhood.
But Robinhood,
do you want to guide him to we can just so we don't kind of go down that little spiral and
sure.
kind of get back to talking about Hex. Camilo, there's lots of information. You can maybe talk to us on the WhatsApp, ask some questions in there. I just want to make sure that we kind of complete this one conversation of Hex. Everything you're asking is really valuable, and I want to keep us on Hex, if that's all right.
Yeah. Sorry about that.
And Camilo, we just put in the chat the link to our. It's a quick form you fill out, and we'll put you on our WhatsApp, and we'll send you an email every week when we have this event. So we'll notify you. And thank you for all your awesome questions. I learned a lot from your questions. Appreciate it.
No problem. Thank you.
And we usually go 1 hour. We're a little bit over. So I just want to acknowledge that we've gone over. And obviously, this is a very interesting area to be looking into. So thank you, Carlos, so much. I did have one question.
Sure.
Real quick,
and then
Carlos.
one more, and then Cassie, and then just so we can get Cassie in there too.
Yeah. I'll answer
absolutely.
all the questions. Don't worry.
Yeah. I just wanted to acknowledge that we're over. If anybody needs to go, we will have a recording of this. But my question is taxes. So I know that the longer you hold your money before you take gains, you have the opportunity to pay less taxes. Is that correct? And does that relate to these 1 year, 2 year, 5 year staking ladders?
Yeah, that's another rabbit hole, but it works a little bit different because you buy a Bitcoin, you hold it for a long period of time, you never sell, there's no taxable event. You flip it to Ethereum, there's a taxable event. You sell it, it becomes a taxable event. So the question here is, how is the interest or the new minted money that you get, or an airdrop? You guys are going to be familiar with this term, like an airdrop. How is an airdrop tax for you? So we have to go into the tax code here and discuss what is it that is not clear as far as how an airdrop is taxed. But there's basically a letter that the IRS already submitted saying this is the way that we're going to go ahead and treat it. So we're taking that as law. What happens here is that whenever you get for example, Bobby, if I go ahead and let's just say that I give you a car as a payment for something, or I give you corn, or I give you a tractor, or I give you anything, we have to get the fair market value of that object at the moment that is being given to you, and therefore that would be considered income. So an airdrop, you didn't really pay anything for it. There's no cost basis. Basically, the cost basis would be the fair market value, but that would only be for if you're planning to sell that object in itself. So therefore, if you get the airdrop, the fair market value is at $10. The income that you have to record that year is $10, as if it was a business operation. $10 of income, but you didn't sell it. You're like, well, I only held it. I only got it given to me. Why would I have to pay income in it? Well, that's the way it is. You know, it's like I give you a tractor or I give you corn, you're going to have to pay tax on it as far as the fair market value of that income. So all the interest that you guys are earning with Hex, it has to be recorded as income. If you guys are making $150,000 in just purely interest, even though you don't sell the full amount of the 150,000, you guys will have to record it as income. And that's just basically the technicality of how airdrops are taxed. And if you do sell it, let's just say that the fair market value when you receive that airdrop or that interest is at $10 and then you sell it at 15, then you have to pay tax again as far as a capital gain. Your capital gain is $5, long-term 15%. So you're going to pay tax for the freeness of that airdrop that you got. And then if you sell it at a gain, then you pay capital gain. If you sell it at a loss, well, that's a capital loss.
Quick question. So based off of that, if there's a window for an airdrop, it'd be advantageous just to wait till the price drops, or
no? I mean, I don't want to sell at a loss.
Let's say there's like 300 of a certain token, and then like, would it be better to just wait till the price drops so you claim it at that point, and then your fair market value is lower, so you get tax loss?
That's a way to go. But I would not want to sell it at a lower price unless what your strategy is. I would add to that. I think it's a good ideology, but what I would add to that is that you rebuy your position immediately. And the reason that you would do that is for obviously the expectation of price increase. But the reason to record the loss is because you want to go ahead and harvest those losses, because we don't have anything in the securities world. We have wash sale. In the crypto world, we don't have wash sale. So therefore, we're able to record losses, even if we rebuy our positions right off the bat. So wash sale is in the securities world is that you buy Tesla, it drops, you sell it, and you rebuy your position because of the expectation of it going up. The loss that you recorded does not count if you rebought your position within a 30-day period. In the crypto world, we can sell at a loss, rebuy our position, and record that loss and harvest those losses throughout the year, so you could offset the total amount of gains that we have at the end of the year, or income. You know, so it could work out. But as far as a good strategy, I would just rebuy the position just to harvest those losses throughout the year.
Thanks.
And we have a question from Cassie.
Hi.
Hello, Cassie.
Thanks for being here this evening. I'm learning a lot, and I also have tons of questions because I consider myself like total newbie when it comes to this. I'm just starting to get into learning what cryptocurrency is and the whole world of that. So I'm wondering, is there any like one website or podcast or YouTube channel or something that you would recommend for anyone getting into it, or just to be in the loop?
Well, I mean, there's for crypto overall, the Coin Bureau is probably one of the most educated channels that I've seen. The Coin Bureau, because he doesn't really chill any coins or anything like that. He talks about the fundamentals of what crypto is. So I would definitely direct you to the Coin Bureau. And once you get into more of the advanced things like yield farming and staking and all these different things, I can probably direct you to other channels, but you need to get your core basics first. What is a blockchain? I would recommend for you to actually read or listen to the audiobook, The Bitcoin Standard. It really enlightens you with how a blockchain is, and also how Bitcoin has revolutionized the industry of blockchain. And once you have an understanding of digital asset and then everything else, which is a good point that Camila brought, then you are going to be able to understand what you're getting yourself into when it comes to the risk and your tolerance and building that up. So I would give you those suggestions for now.
Great, thank you so much.
I'm sorry, they're asking the Bitcoin standard.
Bitcoin standard. So.
That's the name of the book. Yeah.
It looks like, you know, we took this time to find out about the long-term investment that you wanted to share with us about Hex, which is, it's super fascinating, and we're going to have you come back next week. So everybody, please make your calendars to come back next week and join us on a short-term. Well, I'll let Carlos talk about a little bit intro about that, and then also, Carlos, is there any, if people want to participate in Hex and not, I mean, obviously you want them to do their own research and learn about it, but how can we utilize your services?
Oh no, I mean, you guys know I have a fund and we invest in it, but it's not something that I want to promote for this conversation. This is basically just on my tax services, but at the same time, you know, it's, you guys do you and do whatever. I don't want to promote that. You guys can follow me on Twitter. I'm trying to increase my followers in Twitter. But it's at Carlos D. Quintana. That's it. But other than that, is Hex is just one of the projects that has given me life-changing gains and a different vision of what I see for myself in the future. And that's what I really wanted to just share with you guys, because what it opened up from the esoteric point, or you know, from the emotional point of view, is freedom. The freedom to be able to choose to do the work that I like to do. The freedom to be able to visualize myself in a future of unlimited possibilities, where I can travel anywhere in the world, where I can go ahead and have the house of my dreams, where I can go ahead and have all these different things. Even like I said, with a conservative amount of the projection of the coin, even if it stayed at the same level, I'm doing the math for me to actually know how much money I need to put into a certain smart contract over a period of certain years, so I could actually be able to produce that interest and have that expire for me to actually be able to comply with the milestone that I'm giving myself. And obviously I'm doing all these other different things, and I have a fund, I have the account, you know, I work at the accounting firm and whatever, you know, I'm still doing all these other things, but what I was trying to convey is the freedom and the opportunity that has given me, because I was able to have a little bit more joy and freedom in my life when I had this sort of mindset for delayed gratification. And I just wanted to share that, you know, with everybody.
Thank you so much for your contribution on that. That's a real gift to all of us in the Crypto Money Magnetism Collective. And we're excited to hear you speak again next week. And Bobby, do you have anything to say?
Thanks to everybody for being here tonight and staying late. And I saw Roxy say, oh, tomorrow's a holiday. So yeah, you're right. It's I think everyone was really at the edge of their seat in this. Everyone stayed on. So I think everyone got a lot out of this. Carlos, I appreciate you being here and your contribution to having us all have it all. So appreciate that. Thank you.
Yeah, you're welcome, guys. And yeah, next week I'll do a little bit of we'll talk about the passive income is like more short term. You know, it's a little more volatile too, but with a certain amount of money that you guys have, you can stake it, and the APYs are a little bit better. You know, like, anyway, it sounds insane for some people, but 7,000%, but it's a sustainable 7,000%. It sounds insane to say it, but anyway, it pays out about 6% per 5 days, and I've been able to use that, you know, through, you know, a few months, and it's pretty good. I'm increasing obviously the amount of money that I have in those investments, but just to give you an idea, calculate 6% on a certain investment. If you have $10,000, you're going to get paid $600 a week or per 5 days. And that's pretty good for some people. You know, that's already complementing their salary, or for them to be able to afford a car or whatever it is that they want. I obviously have different milestones. My financial profile is my financial profile, and I have different things, but it has given me the opportunity for me to start thinking into like affording a house in which I pay rent for $10,000 or $15,000 because I want to live in a house that pays me that much. I mean that gives me that quality of life. That's what I'm trying to convey. But anyway, that's basically the intro to that. We'll talk about the project next week, and if you guys want to know more about it. For the meantime, the project is called Olympus DAO, or for short, OHM, OHM. So do your due diligence, watch videos on YouTube, check out the liquidity on it, the slippage. Go ahead and look at audit codes for security, making sure that there is no exploits on the code, all that kind of stuff. I've done my research, and that's why I have a lot of the money in there. So you guys go ahead and do yours, and I'll see you guys next week.
Awesome. Thank you so much, everybody. Thanks, Carlos.
Yeah,
have a good one,
guys.
Good night, everyone.
Thank you.
Thank you.
Thank you.
Thank you.
Thank you, everybody. Have a good night.
Good night.
Thanks for the invite, Bobby.
You're welcome. Thanks, Christopher.
Hey, Danny, if you're still there, I just followed you on Twitter. I'm gonna hit you up.
Oh, nice. Nice.
Bet. All right, bro.
Yeah, for sure. I appreciate the follow, man. I put a lot of stuff in there too. You're gonna get a lot
It's
of
all
good
love.
content. Yeah, I'm very involved with 3 projects. It's just Olympus DAO, Hex, and the parachain auctions for Polkadot. And
All right.
yeah, that's launching too. So if you want to know more information about it, I can guide you through it. But yeah, I've made a lot of money with that too.
Yep, I'm definitely gonna hit you up. But like you said, I'm gonna do my due diligence. But yeah, I'll be in contact with you.
Sounds good, brother. All right, take care.
All right, good night.